I know you were bullish, but are you surprised how strong the oil markets have been the last couple of weeks?
We've learned 3 lessons this year that help explain why oil is off to such a strong start. First, we had this surprising Saudi cut. As you mentioned, it helped offset the lockdowns that are spreading across Europe and Asia. Second, the outcome of the US election means more stimulus, more oil demand over the next couple years in the US. And third, shale producers have reiterated again their commitment to discipline. So with a large impulse from vaccines and a lagged supply response, we're fast forwarding the rally to $65 prices in our view.
Damien, connect the dots between stimulus and oil demand.
So there are 2 key policies being put in place globally. Policies to help the economic recovery and fight income inequality, and policies to achieve a greener economy. Now, the stimulus, ultimately, whether it's in Europe, in the US, and China, includes support for both policies. When you focus on incomes, you're supporting commodity consumption. Right? You take your bottom third of the income distribution, and there, roughly half of your spending is on energy, food, capital goods. So supporting income is supporting commodity consumption. On the investment side, sure, a green economy will consume less oil. But to build it, you initially need a lot more diesel trucks. So when you look at the amount of stimulus and where it's being spent, it's in areas that will directly support energy consumption and will lead to a fast normalization in oil demand, especially when coupled with the benefits of vaccination.
Yeah, and we know that this administration wants to pour billions or hundreds of billions or trillions of dollars into renewable energy, wind, solar, hydro, whatever it may be. I read your last report with interest, Damien, because it seemed to suggest that a push for renewables might also stimulate fossil fuel demand in the near term. Is that accurate?
Exactly right. If you think about the deployment of renewables today, what it is achieving is a displacement of coal of nuclear generation, for example. What is missing, though, is the pass-through for that renewable power to displace transportation demand. And the key really are electrical vehicles. Their sales are exploding, but they remain a tiny percentage of the existing fleet. So as activity picks up, we still need, as I mentioned, those diesel trucks, and consumers still, for the very mass majority, drive gasoline cars. So really what you're seeing is oil demand support that is not destroyed by renewable investment yet. Over the long term, yes. The second component as well is the incentive to invest in renewables, to some extent, is cannibalizing the dollars that typically would have been spent on oil supply. Look at the majors, right? Diverting CapEx from oil projects to renewable projects. That contributes to this binding underinvestment in oil supply that will matter once demand recovers. And as we argue, require higher prices to make this essential commodity balance in 21, 22, and beyond.
Shepard Smith here. Thanks for watching CNBC on YouTube.